I'd like to thank everyone for joining today and introduce myself for those who do not know me. My name is Jaslyn Fitzgerald and I am State Manager for HIA Insurance Services, South Australia and Northern Territory, and Acting State Manager for Western Australia. I will be your presenter today, outlining the legislative updates and product changes to the Builders Indemnity Insurance, also known as Builders Warranty Scheme here in South Australia. There will be an opportunity at the end where I can address questions. You can input your questions in the chat box at the bottom of your screen throughout the presentation. Just before we start the presentation, I want to make a quick disclaimer. The information being provided today is general advice and an overview of the changes, the product, and what this means for residential construction businesses. For any advice about your specific business circumstances, please feel free to contact our office so we can have a more personalised discussion about your needs and situations. We'll kick off today with an outline of who HIA Insurance Services are and our specialised service to the residential construction industry. HIA Insurance Services is a joint venture between the Housing Industry Association, HIA, and Aon, a leading global professional services firm providing a broad range of risk, retirement, and health solutions. This joint venture provides HIA Insurance Services with the unique opportunity to leverage the buying power, insurance governance, and risk capability of Aon, as well as accessing the HIA and utilising their deep knowledge of the housing industry. At HIA Insurance Services, we have over 15,000 clients in the residential construction industry. We've got 39 offices Australia-wide. We've issued over 1 million builders warranty certificates since 1982, are a market-leading provider of builders warranty insurance across Australia, and have helped facilitate over 40,000 builders warranty reviews. As I only like to talk about myself on a Friday, here is an overview of my experience within the insurance industry in presentation form. I have been an insurance broker for over 20 years, specialising in many different industries, construction being one. I have a focus on risk management of businesses and expertise in complex claims. I'll just leave this slide up so that you can have a bit more of a read about my qualifications. So what is Builders Indemnity Insurance? Builders Indemnity Insurance is a safety net cover that protects homeowners if a builder can't finish the job or fix defects due to death, disappearance or insolvency, giving peace of mind to clients and meeting South Australian legal requirements. Now we've gotten through the preliminaries, the main event. What are the changes to the Builders Contractors Act? We've had an update to the Builders Contract Act 1995, specifically the Building Work Contractors Building Indemnity Insurance Amendment Regulations 2025. The changes are designed to align with the current market conditions. We are also going to be seeing premium increases. Variable rate builders will see an increase of 22%. We also have an increase in limits. The threshold limit for works that require the product is increasing, and so is the insurance cover limit. Let's go into a bit more detail. So since 2013, QBE has managed builders indemnity insurance on behalf of the South Australian Government through the South Australian Government Financing Authority, also known as SAFER. Following the recent review of builders indemnity insurance, the product, scheme and legislation, the following changes are going to be occurring. The insurance cover limit will increase from $150,000 to $250,000 on new policies issued on or after the 1st of October 2025. the threshold for works that will require building indemnity insurance will increase from 12,000 to 20,000 on the 10th of November 2025. And the premium changes will occur on the 1st of October, where variable rate builders' premiums will increase by 22%. So what does this mean for residential construction? The changes reflect the current market conditions and the industry needs. We are aligning with our interstate counterparts. The review undertaken was thorough and ensured current levels of minimum threshold and payout limits aligned with what is required in South Australia. Our last premium increase for this product was in 2023, which was minimal, less than 10%, despite the 4 significant insolvencies impacting the scheme over this time. We want to encourage people to build new homes, which we absolutely need in South Australia. The government is showing their support with the increased payout limit, and while this also comes with a premium increase, the payout limit increase of 67.5% is significantly higher than the premium increase. The product itself is not changing. There is not going to be any change to how your reviews are managed or how the product is underwritten. Your individual facility limit will not be impacted, and no additional pressure on your business for additional reporting requirements or the like will be required. There are other providers of builders indemnity insurance in South Australia, 2 private insurers who offer an alternative solution to QBE in this space. Asset Insure is one of these private insurers who can offer builders indemnity insurance. They are going to be increasing the insurance cover limit to 250,000 on the 10th of November in line with the regulation change commencement. And AB Phillips, who is another private insurer who can offer builders indemnity insurance to swimming pool and spa builders only, they will be increasing their insurance cover to 250,000 from the 13th of October. These insurers do not form part of the builders indemnity insurance reinsurance arrangements with the South Australian Government Finance Authority. Now, I'd like to talk a little more about the product, new eligibility and review requirements. I think a lot of you on this webinar today will know that South Australia is facing a significant housing crisis driven by population growth, limited housing supply, and affordability challenges. Increasing the number of residential builders is crucial to accelerate construction and meet demand. However, simply increasing builder numbers is not enough. It is essential that new and existing builders operate with robust, financially secure business models. This ensures that they can withstand economic fluctuations. Avoid insolvency, and reliably complete projects. Financially stable builders protect home buyers, sustain jobs, and contribute to a healthy, resilient construction sector, ultimately helping South Australia overcome its housing shortage more effectively and sustainably. The first thing is industry experience and competency. Directors and supervisors having had experience in the construction industry is key. However, if you are new to the industry, an experienced and competent supervisor and mentor to help guide and shape the business is really important. Starting small and be willing to do the hard work to grow. Supervisors that supervise for more than 2 companies will need to outline how they plan to manage workload and ensure quality workmanship on all sites. If you are a new entity and your supervisor is supervising 4, 3 or more building companies, you will need to explain how they are going to manage this workload. Just having an experienced supervisor won't necessarily get you what you want. As a director of a building company, you need to show your own experience and understanding of residential construction. Having a solid business plan backed by financial security goes a long way to obtaining a new eligibility facility. What are some of QBE's standard requirements when a review is called for or you are seeking an increase? Number one, all financials should be prepared under accrual-based accounting. Accrual-based accounting records income and expenses when the work is done, not just when cash is received or paid, giving builders a true picture of their business performance. What is accrual-based accounting? For example, if you finish a job in June and send the invoice to your client, accrual accounting says you count that as income in June, even if the client doesn't pay you until August. The same goes for expenses. If you get a bill from a supplier in May, you record it as an expense in May, even if you pay it in July. This method gives a clearer picture of how your business is really performing, because it matches your income and expenses to the time when the work was actually done or the materials were used. It helps you see whether jobs are profitable and keeps your accounts in line with how your business operates. Builders seeking or with a facility 5 mil and over must have AASB 15 compliant financials. AASB 15 means builders must record income as each stage of a project is completed, not just when invoiced or paid. AASB 15 is an accounting rule in Australia that tells builders how and when to record income from their building projects. Instead of recording all the money when you send an invoice or get paid, AASB 15 says you must record income as you actually complete parts of the job. This means you only count income as you finish each stage of work, making your financial reports more accurate and showing how much of the project you've really earned. Builders seeking or with a facility 10 million and over require general purpose financials. General purpose financials are comprehensive, standardized reports that provide insurers and other stakeholders with a clear, reliable view of a company's financial position and performance. General purpose financial statements are detailed financial reports prepared according to all Australian accounting standards. They are designed for people outside of the business, such as insurers, who need reliable and consistent information to assess a company's financial health. These statements include the balance sheet, profit and loss statement, cash flow statement, and notes explaining the numbers. Because they follow strict rules, general purpose financials give outsiders confidence that the business's finances are transparent, accurate, and comparable to other companies. Builders seeking or with a facility 50 million and over require audited financials. Audited financials are business accounts that have been independently checked, giving insurers confidence that numbers are accurate and reliable. Audited financials are financial reports like your profit and loss statement and balance sheet that have been carefully checked by an independent accountant, an auditor. The auditor reviews your records and processes to make sure the numbers are accurate and that your business is following the proper accounting rules. This gives outsiders, like insurers, extra confidence that your financial statements are trustworthy. Let's talk about growth aspirations. Obviously, in order to build more houses, builders need to increase their facility. There are some tips that we can help with to achieve these growth aspirations. The first one being Make sure your accountant truly understands residential construction, because accurate reporting of unearned revenue can make or break your business. Having an accountant with experience in residential construction is essential for accurate financial reporting and business success. Construction projects often involve complex contracts, staged payments, and deposits received before work is completed. An accountant who understands the industry knows how to correctly identify and report unearned revenue, money you've received for work not yet finished, so your financial statements truly reflect your business's financial position. This not only ensures compliance with accounting standards like AASB 15, but also builds trust with your insurer by showing a clear and honest picture of your obligations and progress. Properly reporting unearned revenue helps prevent misunderstanding and supports better decision making for your business. Builders aiming to grow their business need more than just ambition. They need a rock-solid foundation to support that growth, pun intended. This starts with robust financial management, understanding cash flow, budgeting accurately, and keeping track of costs and profits on every project. Next, having reliable systems and processes in place, from quoting and project management to compliance and reporting. This ensures the business can handle more work without losing control. And finally, investing in the right people. Skilled staff, trusted subcontractors, and knowledgeable advisors like accountants and insurance brokers creates a team that can deliver quality at scale. With these elements in place, builders can confidently take on bigger projects, secure finance and insurance, and grow sustainably for the long term. So what is the current South Australian climate? We know we urgently need more houses built. We're seeing certificate numbers go up across the board. Trade shortages still remain a concern. And with rapid growth, we must stay on top of our cost controls. At the moment, our current maximum capacity to build is around 12,000 houses, and we know we need somewhere in the vicinity of 16,000 dwellings per year built to keep up with the current population growth. We're seeing an increase in certificates across the board, which means an increase in activity, but trades still remain one of our biggest concern. With the amount of growth required, builders need to be across their cost controls. Ensure you are getting prices from your trades and suppliers for when the job is to start. For example, if a project is due to start in 6 months' time, ensure you price according to 6 months down the track, not right now. We also don't need a repeat of COVID when the government rolled out the grants in South Australia to boost the building industry and keep people in work. On paper, it sounded great. Lots of new projects kicked off and builders suddenly had a pipeline full of jobs. But the reality was much tougher. The flood of work couldn't keep pace with what builders could actually deliver, especially when trade shortages and supply chain delays hit hard. Materials were hard to get, subcontractors were stretched thin, and a lot of projects ended up stalling or dragging out. This put real financial pressure on many businesses. Cash flow dried up, costs blew out, and some builders found themselves in real distress. Looking back, it's clear we don't want to see that kind of chaos again. So moving forward, it's important that we have a more balanced approach, making sure the industry can actually deliver what's promised and that businesses are set up to handle unexpected challenges so we don't repeat the same mistakes. With the increase in activity, we're also seeing an increase in multi-units. However, many building businesses don't know what makes a multi-unit. So I've done a bit of a flow chart here to say what's a multi-unit, what's not a multi-unit. The first is, does this project comprise of 4 or more dwellings? If the answer is no, it's not a multi-unit. If the answer is yes, are the properties owned by one owner developer? If the answer is yes, this is a multi-unit project. If the answer is no, are there any common works as part of this development, such as adjoining walls, communal driveways, construction of access road, or common utility points? If the answer is no, this is not a multi-unit. If the answer is yes, this is a multi-unit. So there is a bit of confusion around common works. Multi-units have common works attached, whether it's individual homeowners or not. The project may not be classified as a multi-unit development if each dwelling is standalone and a standalone structure in its own right. Each dwelling is for a separate homeowner and there are no common works. The reason why it's important to determine whether or not your project is a multi-unit before you do costing or sign contracts is because multi-unit development insurance costs more. Why does it cost more? Because they come with higher risks and greater complexity compared to single homes. With more units in one project, there's a greater chance that defects or issues could affect multiple homeowners, leading to more potential claims under the indemnity insurance. Typically, multi-unit projects are bigger and more expensive, so the potential financial exposure for the insurer is higher. Building several units on one site often involves more complicated design, engineering, and construction processes. This increases the risk of something going wrong. And as multi-unit developments will often share walls and services, this means that a single defect can impact multiple dwellings, increasing the insurer's liability. And finally, these projects usually take longer to complete, which means there's a longer period of where things can go off track, whether due to weather, trades, or supply issues. If you have works that meet any of the criteria that I've just mentioned, or you are unsure if common works are on site, please ensure you contact your insurance broker before proceeding with any pricing or contracts so that confirmation can be sought from QBE. Finally, just a brief slide on what we see as the top industry risks for construction in Australia. I just want to say that if you're building in South Australia, HIA Insurance Services is here to make your life easier. We've been working alongside local builders for more than 20 years, so we really get what you're dealing with. Whether you're just starting out or you've been in the game for decades. We specialise in builders indemnity insurance, which is a must-have for anyone working in residential construction. Our team isn't just about selling policies, we actually understand the building industry, the rules and regulations in South Australia, and the challenges that come up on site or in the office. If you've got questions about what cover you need, how the insurance works, or what to do if something goes wrong, we're here to talk you through it in plain English. We know you want to get on with the job, not get buried in paperwork, so we focus on keeping things simple and practical. At the end of the day, we're locals who know the local building scene, and we're here to help you protect your business and keep things moving. Now, if we've got any questions, I'm happy to answer.
We do, Jocelyn. I can read them to you now. So we've got a couple. I'll just start off with the first one. Just to clarify, this means that QBE is seeking builders to complete works in progress adjustments on a monthly basis. Is this correct?
No. I'm not 100% sure what that question is in regards to. So may have to talk to this person offline, because there isn't a requirement for you to be completing, monthly reporting things like that. I think I need to speak to that person separately, Pete.
Yep. Yeah, for sure. The second one, we have a person unfortunately missed a little bit of the start of the webinar and has asked, they had missed the comment regarding the under 5 million insurance. Could you possibly just clarify that here?
So just accrual-based accounting, if it's under 5 million. So I can go back to that slide just so that we can pull it back up again. That's the one, sorry, just bear with me. There we are. So if it's under 5 million, we want to see your financials being prepared as accrual-based accounting, which is basically record your income and expenses when the work is done, not just when cash is received or paid. So hopefully that answers that question.
Fantastic. And another question we have, this is a bit lengthy, but a really good question by the looks of it. Hi, I'm a licensed supervisor who is supervising for a couple of companies and have over 30 years experience. Does the insurance access this scenario based on the number of companies under the supervisor or the number of dwellings they supervise? Sometimes one company with 5 million insurance limit, or sometimes 3 companies with 1 million insurance limit.
Yeah, sure, understand. So it's not to say that, you can't supervise for, sort of 3 builders. However, what needs to be shown is how you are actually going to manage all of that workflow. So if it's 1 house a year, that's, per different builder, then, that's obviously one thing. If it's learn from QBE about how you will manage that workflow.
Another question, you've said 22% premium increase and a 67.5% increase in payout. Can you explain more of what the payout?
So under the current, so obviously when the changes take place from the 1st of October, so currently if the builder's indemnity insurance policy is triggered, which means if a builder dies, goes insolvent, or absconds, and the build cannot be finished or defects cannot be fixed, the current payout limit for homeowners, because this is a consumer protection product at the end of the day, that's $150,000. It means that the payout from the 1st of October is going to increase to $250,000 if this occurs.
We've got a few more questions. If the maximum insurance cover on policies is 150K, increasing to 250K for homeowners, why does the premium increase according to the build contract value? For example, whether the contract is for 500K or $1 million, the maximum insurance payout would be the same.
So and that's a great question, and we did look at there's been talk about potentially a sliding scale of insurance costs, but at the end of the day that's an administration issue of trying to administer different payout levels for different build costs. Obviously the premium scale is attributable to the level of the price of the build. So if the cost of the build is lower, then the premium is lower. If the cost of the build is higher, then the premium is higher, because the likelihood of someone with a higher build cost using the entire 250,000 is more likely than someone with a lower build cost, which is why that premium is less.
And we've had a few more questions. Are you expecting another spike in sales like COVID once the Fed government changes its first home builders rules in October this year?
I'm not Tim Reardon, who's HIA's economist, so I wouldn't be able to comment on that as well as what he potentially could. Look, we hope that we see an increase in new home sales, obviously, but yeah, I can't comment on whether or not that would actually occur. I'll have to check with Tim and come back to you on that.
What is the process around advising builders of the price increases? Notification of the latest round of increases came quite late, as such has forced builders to absorb this additional cost.
I believe that the rate increase came out in July, and going to be. We can only go off of when we get notification from the government. So we have tried to do that as quickly as possible. I know that some builders are pricing for things 6 months in advance, 8 months in advance. Unfortunately, we moved as quickly as what we were able to in that instance.
And there's probably one more question. Is there a maximum contract value limit for newer builders?
I wouldn't say there's a maximum contract value limit. It's very much around, well, what limit you're actually needing, require, and then how robust your financials are, your experience, those sorts of things. It does depend on the type of homes you're looking to build.
Another question, for multi-unit developments, do both insurers, QBE and Asset Insure, both have the same financial evidence requirements, build contract, client financial evidence and title?
Sure. So I do know that Asset Insure actually classify 3 dwellings or more as multi-unit versus QBE's 4. I'm unsure about their requirements for multi-unit applications, only because we don't access them. They are a direct to builder insurer.
Another question, the minimum amount has only changed from 12k to 20k and it has sat at 12k for many years. Just wondering why this amount has not really moved in relation to the 2 cost increases.
As in the limit, I'm assuming you're referring to the limit payout increases that we had. We had from 80,000 to 150. This is legislated, so the $12,000 was actually part of the legislation. It's not a simple process to change legislation, which is why it's obviously taken so long. And the government review that was undertaken has actually been about 18 months before coming to these recommendations. So it's more, I suppose, because of the legislation requirements, which is why it hasn't moved in the last 13 years or so.
Another question, in regards to the multi-unit assessment, if a developer comes with 4 dwellings in 2 separate sites, titles, 2 dwellings in each site next to each other, or dwellings being standalone with no common works, would that be considered? Would they be considered multi-unit sites?
Yes, if they're owned by the same developer. If it's 4 dwellings, then next to each other, then generally yes. However, I would always recommend that we send that into QBE for their determination.
So Jocelyn, that's all the. Oh, we've got one more question. In your experience, for builders seeking insurance limit increases, which insurer has been more flexible or accommodating? Has either insurer got a higher appetite for this insurance?
It's an interesting question. In my experience, I wouldn't say that either insurer has a higher appetite for this type of risk. I believe that QBE and Asset Insure both have potentially different underwriting models, which means that it really is dependent on your own business circumstances. It's difficult for me to answer that question, and I'm not trying to avoid the question in any way, shape, or form. But what I'm trying to say is that because the product is quite specialised and every builder's individual requirements are unique to them, I couldn't say whether one or the other is going to support growth. What I can say is what I've explained about in terms of if you do want to grow, then taking on some of the tips that I've shared today will help you in that growth journey.
Well, that's all the questions there, Jocelyn.
Fantastic. I do want to say just one more thing before we all go. Obviously, residential construction is really important to us, and we want to see our builders succeed. We want to build more houses for South Australians, and the government wants this, and QBE wants this as well. And I know that there is a bit of potential misunderstanding about the product and what it is there for, but we're always happy to talk to anyone about Builders Indemnity Insurance here at HIA Insurance Services. I'm more than happy to talk to anyone as well. If you can't get on to speak to someone, you can always contact me. I'm here to help. The team's here to help. I hope this has been informative. I know there are a couple of questions about whether or not they'd get slides. You will get a recording of this at the end. So, if you want to watch me back rambling my way along, please feel free to. But I appreciate everyone's time today. And thank you.